Hello dear traders and welcome back to Insta TV. I'm Anna Kasatkina, you're watching Daily Financial News. The US macroeconomic statistics released on Friday discouraged traders from opening long positions on the US dollar. However, the speech of St. Louis Federal Reserve President James Bullard put even more pressure on the index. He does not consider it rational to hike the interest rate next week. After that, investors are concerned that the monetary policy may be more loose than expected next year. The USDX settled at 96.50. Experts do not anticipate any changes in the instrument movements for now. There are also political factors to note that increase demand for the safe haven yen. The greenback finished Monday's Asian trade at lows against the yen. The dollar-yen pair is trading at 112.60, 112.70. Meanwhile, Japan's economy is still far from great. Its growth slowed down by 2.5% annually after the previous decrease of 1.2%. The GDP reduced by 0.6% in the third quarter after the decline of 0.3% in the second one. China's macroeconomic statistics published past weekend reflected the trade surplus of $44.72 billion, which exceeded estimates. On the other hand, the growth of import and export slowed down sharply amid the ongoing US-China trade dispute. Thus, export increased only by 5.4% instead of the expected 10%. Import rose by 3% after the jump of 20.8% in October. Analysts believe that US sanctions are the reason for the slowdown in China's trade. Nevertheless, Washington loses as well. The US deficit in trade with China was at historical maximum last month. Chinese annual inflation decreased to 2.2% from 2.5%. Monthly, the consumer prices went down by 0.3% after the previous growth of 0.2%. Industrial inflation also decreased in November. The Aussie stuck at lows amid this news. The Australian versus the US dollar pair is trading around 0.7220 after a minor correction. Experts do not anticipate any changes in the movement of the risky currencies as traders shifted their focus to the safer assets. New trading week is going to be rich with macroeconomic events. The UK is in the spotlight at the moment as the Brexit vote will take place tomorrow. The high volatility is expected in the foreign exchange market. That's all for now. Thanks for watching and see you back soon.